Joining me right now is Slatestone Wealth Chief Market Strategist Kenny Polcari and Employbridge Chief Workforce Analyst Joanie Bily. Great to see you guys. Thank you so much for being with me this weekend. Kenny, how is it possible that we got such strong job creation, even though we just saw a contraction in the first quarter and the Atlanta Federal Reserve is expecting a contraction in the second quarter?
I know, that is crazy, right, how that number comes out. So I guess we have to dissect it and digest it and figure out how they really came up with that number. But one way or the other, I think that solidifies, absolutely solidifies that we can expect a 75 basis point rate increase come the end of the month with the Fed chair, because it was stronger than expected, and it's going to feed right into that inflation story.
Joanie, assess this report for us. Where were the jobs?
Yeah, you know, Maria, this could be a different type of recession, right, than we've ever seen before. In fact, I heard an investor talking about recessions are like snowflakes. No two are ever alike. Well, I think this one is going to be really different because the job market is predicted to remain very strong. There is so much demand for workers today in all sectors, really across the board. We see it in trade and transportation, in healthcare, professional and business services, retail, manufacturing, construction, all have a demand for workers, and they're really struggling to get people back to work. And I think the disconnect here of why the job market will remain strong is all about labor participation. We just don't have enough people participating in the workforce, and that's why this might be a different type of recession than what we've experienced before.
Kenny, let me get your take on that and also what we're seeing in markets. The reaction to this report seemed to be, somewhat positive, and yet you're still looking at a market that is down in the double digits year to date, but we are coming off a little bit of a buying spree. Was this just a trade to buy beaten down tech stocks? Would you buy into this this little rally that we're seeing in the last couple of weeks in big tech?
I would not buy into it because I think that's exactly what it was. I think we were in an oversold position. I think there was some talk that the Fed was going to blink or they were going to pivot, and that gave, fuel to the fire under the tech names, because those are the ones that have been absolutely destroyed this year, down nearly 30%, 27 to 28% this year. So for a trade type, that makes perfect sense. But look, if we're talking about the Fed's going to stay on course and they're not going to blink and they're going to continue to raise rates, once again, you're going to see pressure come to the tech names because, as you know, those are the names that are going to get hit in a rising rate environment. So I think it's more of just a trade, a little bit of a short-term bounce off an oversold position. I think the market broadly is going to test lower. I don't think it's going to fall out of bed, but I wouldn't see us be surprised to test 3,600 again on the S&P before this is over. I do think it's building a base there, but I think it's got to test there one more time or a couple more times before this is over.
Yeah, I mean, look, when you look at this jobs report right now, Joanie, wages are still up, but they've slowed. You're talking about a situation where wages have slowed for the third straight month. What are you seeing in terms of pay? I mean, Jamie Dimon told us a year ago that he was shocked to see this tight labor market, that he's never seen anything so tight in terms of the pressure on wages. Is that changing?
Well, I have to agree. I've been in the recruiting and employment industry for almost 25 years, and I've never seen anything like this employment market. The demand is so strong. Employers are forced to raise wages, but wages are still lagging consumer inflation. So the workers are really having a challenge, obviously, with gas prices and putting food on the table. I'm surprised we're not seeing more people actually come back to work because of those issues. But employers are raising wages. I think we've gotten to a point right now where we will see them kind of steady and just hold. I don't expect to see large wage increases moving forward, but that's going to be a challenge if we continue with this inflation.
We're a week away from earnings season. You think we're going to have some pre-announcements, Kenny? And would you be selling into the second quarter earnings season?
I wouldn't be selling into the second quarter earnings season. I think we have gotten some pre-announcements already. We've seen the numbers revised a little bit lower, but I think we're going to hear it during the course of the season. What I'm worried about, as I just said, the margin pressure. I think that's where you're going to see the pressure. Down here, I wouldn't be selling. I'd be putting more money to work in the names that are going to benefit as we make our way through what I think is a current recession already. Whether or not the government thinks we're in it, I think there's a real shot that we're in it already.
The big report that we're all focused on is happening next week, and that's the inflation numbers. We'll get the CPI out on Wednesday. We'll get the PPI out on Thursday, and we continue to see these numbers elevated, even as some people say inflation is peaking. What are your thoughts on the Consumer Price Index out on Wednesday and the PPI, Producer Price Index, expected, by the way, to be up 10% plus year over year on the PPI? Is this priced into the market, Ken?
No, so I think people understand that inflation has not peaked and it's going to continue to elevate. So yes, I think the expectation is there for the CPI, and I think the number is expected to be 8.8%, which is up over last month's 8.6%, and PPI at 10.4, 10.5%, which is right where it was. So inflation continues to remain elevated, and I think that's exactly going to tell the point. It's going to come out 2 weeks before the Fed has their July meeting, and I think that's going to really solidify the fact that they have to raise rates and be more aggressive, and that's why I think the market's going to continue to come under pressure.
Kenny Polcari and Joanie Bily, great to see you both. Thank you.